I thought I'd do a few examples of investors investing in the UK property market, raising finance to enable them to actually buy a property, and just wanting to look at some of the, or one of the lenders who are supporting people, supporting landlords, I should say, in buying their properties. Obviously, when it comes to buying, the lender are quite supportive, taking people up to age 67, and in actual fact they will go up to age 75. Things to think about is this example here of Trevor and Pam. They are looking to take a 73% mortgage, so on a property worth 450,000 they're putting in a deposit of 90, which is just takes them below the 75% maximum for the loan to value. Pam's on 27,000. I don't know what she does, and Trevor's on sort of 50,000 plus a 10% bonus. But the point that I'm trying to make is this situation is for them to be buying a buy to let. So it sounds like a second property, and provided the rental stacks up against the mortgage payment, then it's quite feasible to do that. Example, again, an older gentleman working in a bank. What an income, 200,000 a year. I mean, that would be nice. He is nearing retirement, but again, this doesn't stop him from borrowing. Like I say, we can go past 67 in terms of lending. Now he's looking to buy a £2 million house and looking to fund £1 million with a mortgage over 15 years on a part repayment, part interest only basis. What makes it specialist? Well, one, I guess, is his age, but two is multiple sources of income, so some rental, some earned income. The fact that there's a buy-to-let portfolio in the background, and the fact that he's going to use the sale of another property to pay off this mortgage on the new one. So presumably this is a second home, and I guess at some point a house is going to be sold to clear the mortgage. But the point I'm trying to make is, yes, it can go beyond retirement and to age 75, and yeah, I mean, it can be done, is what I'm trying to say. Obviously, people need advice, and you need to speak to a mortgage advisor about your situation and what you're looking to do. But the point we're trying to make is it can be done. And the last example is, again, Ken and Mary are looking to purchase a bike on a 5-year fixed rate. Fine, no problem with that. They're first-time landlords. Ken's a higher rate taxpayer. I mean, there is some discussion they should be having, I guess, with a tax advisor about the best way to set it up, because it says they want to do it in their own names, or probably they're better off, or might be better off, doing it in a limited company. But that's another conversation that has to be had. But basically, provided the rental exceeds the mortgage with a 35% margin, then they're good to borrow, and again can do to 75 years old. But the point I'm trying to make is about today's video is there are lenders out there who will help people. For example, a lot of people at the Nationwide, Halifax, Lloyds, NatWest, they limit their age lending, or people have mortgages that will be expiring perhaps as they hit retirement, but it doesn't have to stop you from being able to borrow, because there are other lenders that will take you past 65, 67 or retirement age, and you know, it's specialist, but there are mortgage brokers that can help you. Right, hope that makes some sense.